Hello viewers, welcome to my channel. I am Solomon Igwe, your favorite financial advisor and a certified financial analyst. Today, I'll be breaking down the concept of shares using something we all love. Guess what? It is pizza. Whether you're new to investing or curious about how company raise money, in this video, I will explain everything you need to know about shares, why companies sell them, and most importantly, and how you can make money from it. Now let's dive in. What are shares? I'll be using the pizza analogy to explain what share is about. Imagine you have a whole pizza. This pizza represents a company. Instead of keeping the whole pizza to yourself, you decide to slice them up and sell the slices to your friends. Each of these pizza slices represent a share of the company. When you buy a share, you own a small part of the company. The more shares you buy, the bigger your ownership stake. Simple, right? But why would a company want to sell its own shares? Join me, let's find out together. Companies sell shares to raise money for growth and expansion. Think of it like this. Imagine you want to open more pizza shops. You need money to buy new oven, hire staffs, and rent location. Instead of borrowing money and paying interest, you decide to sell those slices to investors. This is called equity financing, where investors give the company money and in return they get a slice of the pizza or shares, also enjoys future profit or future dividend of the company. Isn't that a win-win? Company gets funds from shareholders or investors, and investors equally have the opportunity to grow their money. Types of shares. Not all pizza slices are the same, neither are shares. There are two main types of shares. One, common shares. These are like regular pizza slices where owners get voting rights, also a say in the company's decision, and enjoys dividend. However, if the company goes bankrupt, common shareholders are always last in line to get paid. Preferred shares. These are like premium pizza slices where owners usually don't get voting rights, also a say in the company decision, but they get payouts if the company goes under. They are less risky but have less potential growth. How do you make money from shares? I know this is the part you all have been waiting for. Alright, let me disclose that in a few minutes. There are two main ways to make money from shares. One, capital gain. This is when you buy a pizza or a share at a lower price and sells it later at a higher price. For example, if you buy a share for 10 naira and sells later for 15 naira, your capital gain is 5 naira. Dividend. Some companies share their profits with their shareholders in the form of dividend. It is like getting a small piece of pizza toppings just for owning a pizza every year. Also note that not all companies pay dividend. Some reinvest their profits into the business, which may lead to higher capital gains and bigger or higher returns in the future. Who are shareholders? Shareholders are the people who own the pizza slices or share. They are like people like you and me, or big institutions like mutual funds and pension plans. Shareholders have a stake in the company's success and they can influence major decisions like electing of board of directors. Retained earnings. What is retained earnings? So retained earnings, sometimes a company keeps its profits and reinvests it in the business. This is called retained earnings. It is like saving some pizza toppings to make an even bigger pizza later. While this means no immediate payouts to shareholders, it can lead to higher capital gains and bigger returns. This is a sign that the company is focused on growth and expansion. There are risks involved in shares. Well, investing in shares isn't all cheesy goodness. There are risks. For the sake of this video, I will highlight 3 risks. 1. Market risk. The value of shares can go down if the market or companies perform poorly. Dividend risk. Some companies can cut off or stop dividend if they face financial trouble. Market risk. Some shares are hard to sell quickly without losing value. Remember, the bigger the potential reward, the higher the risk. Always do your research before investing. And that is all about shares. You now understand what shares is about, why companies sell them, and how you can make money from it. All explained using pizza. If you find this video helpful, kindly give it a thumbs up, subscribe, and share to friends for more easy to understand financial content. Let me know in the comment section what your favorite type of pizza is. Mine is pepperoni. See you next time. Cheers.